Hi everyone, welcome to my YouTube channel. Today I'm going to explain basic concepts of accountancy. First one, bookkeeping. According to J.R. Botley, bookkeeping is an art of recording a business transaction in a set of books. It's called bookkeeping. Bookkeeping means it is an art of recording a business transaction. Means we have to record everyday transaction business transaction, like for example bought goods for a cash rupees 10,000, so we have to record it in a book. So we have to maintain separate books here. So we have to maintain day to day transaction. And also for another example, like sold goods for cash rupees 12,000, these also we have to record it there. Whatever the transaction has be incurred in the business, so we have to record all the transaction. For example, sold goods for cash, here 12,000, rent paid, salary paid, rent received. This way we have to record day to day business transaction, so we have easily known what are the transaction has made day by day. So this is called bookkeeping. Got it? Next one is accounting. Accounting is a set of works involving identifying, measuring, recording, classifying, summarizing, analyzing, interpreting, and communicating the result of a business activities and a financial position of a concern. Accounting is a set of works. It involves many. It is a set of works. Means it contains many work, not only one. It is a contains set of work. Okay, involving, first one is involving identify whether the transaction is take place or not, whether it is entered in the bookkeeping or not. We have to first identify that. Then we have to measure it in terms of money. Then we have to record it in a original book like journal. Classify according to the transactions. Summarizing means we have to summarize or uh, clear cut information or present the information in P&L or balance sheet account. And analyze and interpret whether the business has profit or not. We have to analyze and interpret and communicate the result of a business activity and a financial position of the concern. Then laterly we have to communicate to the end users, management, shareholders, creditors. We had all the end user. We have to all the there are all the customers or end users of the company. So we have to communicate the result of the business activities, how the companies are going, how the enterprises are going, enterprises was going. We have to communicate there. They all are knowing what is the financial position, whether it is loss or a profit. It's called accounting. Next move on to features of accounting. First we have to identify. Identifying means we have to identify whether the transaction is taken place or not. For example, in the first we have to search in the bookkeeping. What are the transaction has taken place? We have read in a beforely on setting bookkeeping. We have to maintain the bookkeeping for the purpose of to enter in the day-to-day transaction, right? So we have to identify what are the transaction has taken place. Or if for example, if salary, the enterprises has paid salary, so we have to identify how much salary has to be given. For example, rupees 20,000 you have to pay, so we have to identify there. Okay, then we have to measure it. Measure means we have to measure how much salary has to be paid here. 20,000, measuring means in terms of money or money is worth 20,000 as salary has to be paid here. So we have to measure. Then we have to record it. Where we have to record it, like journal entry, journal journal entry, we have to record it in journal entries. Okay, then we have to classify. Huh? Classified, classified means is nothing but we have to post it into ledger. There is a, here in a salary, the salary rupees 10,000, ledger, salary account, and cash account has came. So we have to classify according to the transaction. Okay, then we have to summarize. Summarizing means we have to prepare profit and loss account and balance sheet here. Okay, balance sheet, balance sheet here, balance sheet here. Then we have to analyze and interpretation. Analyze and interpretation means after preparing a profit and loss account and a balance sheet, we have to analyze whether the profit and loss account shows profit, shows profit, the company is going, shows profit, the company is going well. Whether whether it shows is loss, the company is not going well. And also we have to analyze balance sheet. What are the assets, liabilities are there, we have to analyze this here. This is helpful to know. This will helpful to know what are the asset, what are their liabilities. Then we have to communicating the information to the end users. Okay, communicating the information to the end users here. End users are yaru. End users means management, debtors, creditors, shareholders, etc. We have to communicating the information for all those person here, because they are the owners, or and they are the owners of the company. They have must to know that what was going to be happen there, what is the financial position of the business, how the company has going through. So they all the person has to know it. So we have to must, we have to analysis and interpret to the end user. They has to know it, whether we have to invest or not, whether we have to give a credit facilities or not. They has to be know